Thanks, Mansi, and a very good morning to everyone who's attending this session. I know that we have participants from all over the world, and I feel very fortunate to have a very illustrious panel here. And really thank you. And I know that while we have limited time, we'll just try to make the best use of that. Let me quickly introduce our panelists here. We have Mr. Ashwini Bhatia, who is the Managing Director at State Bank of India, heading the corporate banking and global markets. He was also earlier working with the bank's funds management business, which is the largest fund management business in the country. I also have here Professor Ali Contractor, who actually represents the IIT Alumni Trust, which is our anchor and the sponsor of the fund. He's the former Dean of IIT Bombay, and he's been also on our board of advisors right from the inception at IvyCap Ventures. We also have Mihir Vora, who is the Senior Director and Chief Investment Officer at Max Life Insurance. And of course, very, very illustrious background in terms of investing. And we have Mohak Goyal, who actually comes from the family office of Sheel Chand Agro. He's been very actively investing in across funds, across startups. So I would love to hear his experience on how he's been, looking at the entire venture capital ecosystem. And last but not the least, we also have Prasoon Gajri, who is the Chief Investment Officer at HDFC Life. So it's a great panel, and thanks a lot, everyone. It's great to have you all here, and it's a very diverse set of people representing different areas from investing world. So let me start with you, Mr. Ashwini Bhatia. So thank you so much for joining us today. And you represent the largest bank in the country, managing such a large book. And of course, State Bank has also been very active now, investing in the ecosystem. Would love to hear from you, your experience and how you've seen this overall venture capital ecosystem building up in the country. So, your thoughts on that.
So, thank you, Vikram. As you've said, we have a pretty decent balance sheet, and this balance sheet has been growing year after year. We also have a pretty active treasury, but one thing that is that as an asset class, private equity.
I think we are losing Mr. Bhatia. So sorry, I think we had a few seconds of break. You can continue.
Thank you, Vikram. As you said, we have a decent sized balance sheet. For quite some time now. This must be about 17, 18 years. And very frankly,
Mr. Bhatia,
the numbers.
We're having a little bit of connection issue. Maybe I think we had broadly understood what you were saying, but maybe if you can, repeat maybe last 30 seconds, that'd really nice.
In our ventures has been very, very good. Going forward, I think this is something the entire ecosystem that has been.
Sir, I'll come back to you. I think there is a little bit of connection issue here, so I'll come back to you. Let me go to Prasoon. Prasoon, I think you've been an investor in IvyCap as well, and now I think you've been seeing this venture capital ecosystem flourish over time. So of course, I remember when we started discussing venture capital at IvyCap. I think at that time you were doing a lot of research on understanding the whole space, how typically these investments work. What has been your experience in this space?
Well, to be honest, Vikram, it's still early days. We have been investors in the space over the last, say, 3-4 years. So some of the funds are fully invested, some are still getting invested, some exits have started happening. So we really have to wait and watch how the risk return really pans out for us. Having said that, I think last 3-4 years, I've seen a few changes, which are, I think, very positive changes as far as we are concerned. Change number one is, I think, the sheer variety of funds now which are there in India. So you can really pick and choose what kind of investments you want to make and accordingly figure out a fund. Because end of the day, we are large long-term investors. We manage our own portfolio in the listed space. So we are actually far more interested in funds which give us diversification away from what we can do ourselves. And today, I believe there is a lot of variety of such funds. Because earlier, when we started off, we were finding it a little bit difficult to get that kind of a variety. So I think that is one big positive which has happened. Number two, I think there is some recognition between the GP community very clearly that the domestic investors are also becoming sizable. See, prior to the insurance companies becoming part of the ecosystem, it was primarily the state-run banks, the PSU banks like SBI, who were the leading investors, and maybe LIC. Among the domestic institutional investors. So when we started off, we tried contacting a few funds, and most of them were not really interested in domestic capital because their sizes were typically much smaller than what they were looking at. They were far happier taking larger size checks from large global pension funds and global investors. But I find a very positive change that not only there is recognition that domestic capital is important. Even when we have small checks in some of the funds, I think we are getting treated reasonably fairly by a lot of these funds. So I think overall a positive experience in terms of how the asset class has shaped up. How much our allocation will be, how things will pan out, I guess we'll get our answers over the next 3 to 4 years. When the final money starts coming back, what kind of returns we make. I think that broadly sums up in terms of our experience so far.
Great. No, thanks, Prasoon. I'm not sure if Mr. Bhatia is back, but let me go to Mihir. Mihir, I think I've also seen Max Life becoming very active in this asset class. So would love to know your experience, how you've seen this growing over time.
Thanks, Vikram, for having me. Always a pleasure. It's been a excellent learning curve for us. Like Prasoon mentioned, we started about at the same time 4 or 5 years back, and the gamut of offerings available is far better. And more importantly, what we have seen is that in the last 4 or 5 years, when we started off, there were very few funds with track records. But now that we've had some time to examine the space, and funds have also had the time to demonstrate the track record, the experience is much more comfortable now. And we have seen that at least the filters that we have used in terms of trying to weed out the startups or the first timers and have worked very well. So I would say that out of the dozens of funds that we have made across asset classes, not only VC but in the PE space, in the structured debt space, etc., the filters have worked very well. And after those filters of quality, etc., track record have been met, then the experience is that most of the funds have stuck to their investment philosophy. Most of the funds have stuck to the investment discipline of valuations, etc. And the outcomes across the board, the strike rate after those filters is very high. So all in all, a very positive experience so far across various strategies. As I said, not only VC, but across all the strategies. The other good spin-off, which is kind of a pleasant surprise, is that, we would have been in a blind spot as far as the tech space is concerned, the fintech, consumer tech space is concerned, if we hadn't started investing in the AIFs, especially in the PE and VC space, because for many years these segments were very small, under the radar, kind of niche, and suddenly they have come up. But if we hadn't kept track of what's happening in the portfolios of our investee companies, our investee funds, we would have kind of missed the whole trend in the tech space, so to say. So that's one, outcome that is very positive for us, that it's been a good learning and good way to keep in touch with the newer sectors in the economy also.
That's actually very, very heartening to hear, both from Prasoon and Mihir. And we have a large audience today, and quite a few budding funds who are actually setting up new funds, and also investors who've been investing. So I'm sure they'll be quite excited listening to your perspectives on the space. Mohak, I think you have, you represent the family side, and I've seen that there is a very interesting trend emerging over there. And I've started knowing you very recently, but I can tell you that I was very, very impressed the way you have analyzed the whole space, the number of funds that you invested in, and how you look at those funds from investing perspective. I haven't seen too many families also doing the way you go in a very structured fashion. So how's been your approach and your experience so far? And what's your view of how this space has been emerging so far?
Thanks, Vikram. We started investing 3 months ago, and as a family office, we have never invested in any of those in the past. Whatever we earned, we reinvested in our own business. But now, after 3 months ago, we started finding options, and I think in India we have too many options. If you want to do seed round, you have funds over there also, Series A, Series B. So people have different options, and I think what is more important is, there's a lot to learn if you're working with the funds, because, they will connect you with the startups also. And if you have synergies, you can use those in your own business also. So I think that is very good. And at the same time, I feel that now local founders or, people who have built companies are opening their own funds, and they are mentoring the startups also, and they are giving them mentorship so that they can grow at a faster pace.
Great. Thanks, Mohak. I think it's very interesting to see how, the way you have currently looked at the entire space and how you're experiencing it. I would love to hear more from you, but let me come to Professor Contractor. Professor, I think I must say one thing, that right from the day we conceptualized IvyCap, I think you have been there with us, I would say even from before we started. And you are the representative of our core anchor investor, the entire IIT alumni ecosystem. So, of course, your perspectives also are very important here. So I'd love to hear, how have you seen this asset class emerge, given the fact, how we conceptualize the whole thing and how we come this far with the kind of engagement we have from the alumni ecosystem?
Yeah, thank you, Vikram. I'm really happy to be associated with IvyCap. As you said, I've been associated right from the beginning. So it was almost like, has been a learning experience for me from a scale of 0. And as far as the alumni are concerned, I think IvyCap, I would look at it as a kind of a platform which provides an opportunity for alumni to give back to their institution in various ways. Okay, those of us who have made a lot of money make big donations, but there are also people who have not very large sums of money, but have time, have talent, as Professor Mahesh was saying, to contribute. So I have been able to see this, enabling sort of operation which IvyCap has done. A lot of it has also given us the opportunity to interact with alumni from a variety of background, with variety of experiences, and learn from them. And with the kind of companies in which IvyCap has invested, and particularly I'm really impressed with the seed funding which IvyCap has done. And I think you're going to see a lot of return from some of the new companies in which, especially in deep tech and things like that, which will, not only give you returns in financial terms, but also put India on the global map in terms of, technology, etc. Very often our companies tend to be, copycats. Something succeeds in US and then we try to do it here. But some of the newer companies, I think, are really path breaking, and they actually have a larger role to play on on a global context rather than just the national context. In fact, one of our new companies has, almost all of their revenue comes from outside India. So I mean, this is really nice to see that talent which has been nurtured in India, which has been supported by funding from India, is able to step out into the world and make a name for itself. So it's really very nice.
Thank you, Professor Contractor. I can't see Mr. Bhatia here, but I'm not sure whether he's there. Mr. Bhatia, can you hear me?
Yes, I can.
Oh, okay, perfect. So sorry, we couldn't hear you properly earlier. So please go ahead with your comments.
Yeah, so State Bank of India got into the private equity venture capital investing about 18 years back. I think amongst the public sector, we were the first movers. What we realize now is that we have to be in this space. Capital is not a constraint. The Reserve Bank of India guidelines do permit us to invest in this space. So just to give you a sense, banks in India are allowed to invest up to 20% of their tier 1 capital into equities. Most of them have not even touched a small percentage of that. We think that wherever we cannot take, say, some credit exposure, companies need to be profit making and so on and so forth. This is the way to enter this new industry. And of course, the choices today are far more. The last 2 years has actually seen a explosion. And you open up any newspaper today, there are at least 2 pages devoted to private equity entries, exits, private equity getting out through IPOs. So that opportunity has become much bigger. I think we have enough risk capital to put into this segment. And for the last 18 years, I can tell you that we have not been disappointed. So some funds may have underperformed or not given the IRRs promised and all, but we know that is par for the course and those kind of things happen. What has also helped us and will help us in going forward is that we will also be getting co-investing rights. So we also know that credit may not happen in the real sense anymore going forward. The capital markets and the IPO market attached to it will actually grow bigger. So it's better to be an early mover, start faster, and make good returns. So we are very open to it. And I think our exposure in the coming years will increase also.
No, that's actually very heartening to hear, Mr. Bhatia. Is actually, in fact, I have been in this space now, investing for almost 15 years now. And to be honest, seeing institutions like State Bank actually, even talk about co-investing and, taking equity exposure in startups is actually very, very good for the ecosystem. In fact, that also brings me to the next question in terms of how investors are looking at co-investing along with funds. And maybe I can start with you itself, Mr. Bhatia. I think you have, in fact, started also looking at that as an important measure. How does it work? Within the institution, I'm sure it's not easy for you to really, move the system internally and, work towards that because there are certain regulations you can't take beyond certain stakes. Businesses, how they align with the core business, etc. So, how does that work for you?
So, once we are invested in a fund and we know the performance, actually the next step you talked about co-investing, that actually becomes simpler. So, today the ecosystem is such that, you don't actually have to come at the venture stage or the initial stage. There is series A, B, C, D, so on and so forth. There is pre-IPO. So very frankly, I think that is a better opportunity for us once we know what is going on in the company. Steering that within the system in the bank also is very frankly, not difficult. If they like the opportunity, they see it. And we actually think that this space will again grow further in addition to funds and so on and so forth. So I look at it very, very positively, and we are willing to wait. Our capital is also patient. And I know there could be some dud investments also, but the others will make up. I have no doubt about that as well. So internally, I can tell you that there is not much issue. Today, we are actually put some money here, there.
Mr. Bhatia, I think you're breaking up again. So,
Okay. So for us, nothing is more important than
sorry, I think we broadly understood, Mr. Bhatia, what you're trying to say. Thank you so much. I think that is very, very interesting. In fact, the same question to both of you, Prasoon and Vihir, because I think you represent a very different investor class, which is actually, in my view, insurance as a sector, I think aligns very well in terms of the long-term nature of this asset class. But from a co-investment perspective, how do you look at it? I mean, are you thinking of maybe at some point that would be interesting for insurance companies to also look at, given that the scale of these businesses is growing very fast?
Oh, definitely. Co-investing is something which we'd be fairly keen on. We have explored this space. There are certain regulatory challenges which we have, which hopefully over a period of time will get sorted out. Barring that, frankly, we are keen for 2-3 reasons. One is clearly it's a complementary space to what we do. It's in companies and industries which we are normally not invested in. We have the bandwidth to analyze these companies internally, so it's not that we can't. And obviously, the funds we are invested in are more than supportive and helpful in terms of us understanding these companies. And we have reasonably large equity corpuses, so we can allocate, even if we allocate to 3-4% of our overall capital, it gives us a reasonable size to play with. So logically, co-investment is something we looked at. And the second reason why we want to really look at the space is also from a strategic perspective. A lot of these startups we can kind of work with. We can have POCs with them, which are going on. As you're very well aware, Vikram, we have a running program for interaction with startups and figuring out what we can do with them, and investing in them helps us further that in a way. So overall, we are very happy and keen to look at it. It's just that current regulations do not allow us to invest in private limited companies. And most of the companies which funds invest in tend to be private limited companies. So it's a bit of a challenge on that count. But having said that, wherever we see opportunities like this, we'll be keen to explore that.
Mihir, your views on it?
Sure. So we are looking at it in 2 stages. So we are not really looking to unlisted equities or venture capital investments or PE kind of investments as a separate asset class initially. We will do that in the medium term, but not in the shorter term. In the shorter term, we are trying to work in spaces or companies which have some synergies in the financial services business with our businesses. So it's more of a business strategic nature kind of investments that we are looking at in the first stage. And in the second stage, we will kind of look to build up unlisted equities as a separate portfolio. But that'll be probably after 2 or 3 years.
Got it. Okay. And Professor Contractor, I think from the IIT alumni perspective, of course, our model itself works in such a way that there is a lot of engagement from the alumni, whether through the mentor trust or, people actually working very closely with these companies. How do you see this, over a period of time, given that this engagement itself is growing, from first fund to the third fund already, we have seen substantial increase in the scale. So what's your thought on that? How do you see this opportunity building up?
Yeah, I think the prospects are, very good. And as they say, nothing succeeds like success. So, people are less hesitant to associate with these kind of initiatives. But I'm looking at it more as an opportunity for alumni to give back. to their institutions. As I said earlier also, there are alumni have a variety of talents, and the institutions actually do not have all the wherewithal to make best use of those talents. So I think companies like IvyCap provide that funnel for us to get associated and give back to our institutions, as well as contribute something to the entrepreneurship ecosystem within the country. So I think this is a fantastic model, and certainly alumni will continue to support it.
Mohak, co-investing has been very integral part of most of the family offices' investing philosophy. I have seen that family offices are looking to invest with the co-investing as part of their strategy to align with their own core operations. How are you looking at co-investing as a strategy for your own investing strategy?
So personally, I think we will all agree that this asset class is a little bit risky. And what co-investment does is, it gives you an opportunity to double down on the winners. At the same time, how Mr. Prasoon was saying that, synergies are very important. So like example of that would be, we have invested in a construction software company. So what they do is they will manage your schedule and whether you are on time with the project that you are doing. So those things helps in the business. And if I talk about that from a fund's perspective, that is also good because you have a lot of LPs and institutions that can help startups, and at the same time they can mentor them. So that is my opinion about it.
Sure, Mr. Bhatia, if you can hear me, I wanted to come back to you on a question on how do you typically select investing in a fund, or how do you select a fund? It's important, I think, from many of the audience out here who are thinking of either setting up a fund or maybe already have funds but raising funds. Any thoughts on that from your side?
So it's not any different from others who invest through this route. We are looking for at a strong team. We are looking at the vintage. We are looking.
I think we're again losing you, Mr. Bhatia. I'm so sorry. This is a little bit of connection issue, I guess. Okay, I think, can you hear me, Mr. Bhatia?
Yeah, I can hear you.
Sorry, we lost the last 5 seconds. If you can just repeat that.
Yeah, so all that I was saying that the way we choose the managers or others is no different from the others. Strong team, the vintage, whether there have been any exits, the proof of concept and all. And obviously the comfort does come in when we go in for the second fund or third fund. Governance for us is very, very important. And our past experience, of course, is equally important. So, I mean, it's not any different from the way others would look at it. I don't think this is not a real differentiator, if you may ask me. So pretty much the rules are same for all.
Sure.
Yes, we have become a little more adventurous. The manufacturing side. But now, of course, we have gone into fintechs and technology companies, consumer durables, and so on and so forth.
Understood. No, thank you. I think that's very, very helpful. Prasoon, how about you? How do you decide on a fund manager? You're looking at the first-time fund managers versus, second time or third time. So, how do you look at them?
To be honest, Vikram, we are still learning. And it has been an evolving process for us. When we started off, we found it extremely difficult to choose between fund managers. It was a very, very difficult choice because the data availability itself was very small. I mean, you really couldn't get any public data given the nature of the asset class. and you have to really depend on the person who was presenting to you to kind of accept whatever was being said at face value. So it was tough. I think over a period of time, we have had some learnings. So we have formulated some rules based on those. So I think 2-3 things for us stand out. One is clearly that in this asset class, unlike maybe listed equity, where good performance by a fund manager in 1 year and 2 years may not necessarily get repeated over the year 3 and year 4, because that's the nature of the markets. But in this asset class, typically a firm which delivers good performance tends to do it more often than the other. So track record becomes very important. Number 2, the stability of the team, how long the team has been together, how they have worked together. And now, over the last couple of years, we have started going much deeper into the individual investments made by these funds. How are the returns getting generated? Which kind of investments are generating those returns? So the learning is kind of improving with every passing year. So what we typically don't do now is very often we do not really do it with first timers. Nothing against first timers. I'm sure they have sources of capital, but one, we don't know how stable the team is going to be, whether it's going to last 2 years, 3 years. They may have done a great job in their previous roles in different entities, but one, getting the data is difficult. What the individual contribution is very difficult to judge. And it's a people's game. If it's eventually the fund manager who's going to deliver the returns for us. So first time funds, we have to be very careful, even if we allocate the amounts are smaller. Track record has become very important for us. If we are invested in a fund and it doesn't deliver, we are absolutely clear we're not going for the second fund. And obviously the governance part, how transparent the fund is, how often they share information, what kind of information is shared, are they willing to talk about their companies in greater detail, etc. So I think all these put together, there's no set template, but it's a learning process as far as we are concerned.
No, that's great insights, Prasoon. Mihir, how about you?
Pretty similar to what Mr. Bhatia and Prasoon said, in terms of the quality of the team, the track record, should have been working together for a while, etc. What are the incentive structures within the team? So we sometimes go into great detail as to what the individual level incentives are also for the members of the core team, so to say. And while, as I said, we haven't gone into first timers, but in certain cases we then have waited for 2, 3, or 4 years and gone in for secondary lots. If we like what they've done and gone and invested as per their original plans, etc. So we track them for 3, 4 years, and then as and when the chance comes, we actually have done small investments from the secondary market also based on the track record, etc. So that's something that we are closely looking at, and of course we are also now engaging with some of the investee companies to see what quality of investments have been made as a test, and also to learn about what the inherent business models are running out there in the market.
Thanks, Mihir. We have just about a minute left, but I'll take a question for you, Mohak, which has come specifically for you from the audience. This is Sarvesh from Transparent Capital. It's a very interesting question, and actually I relate to that as well. So it basically says that, in Western countries, you see a substantial part of the family capital getting allocated for this asset class, for AIFs. But in India, this is still very small. The number quoted here is 1%. I personally thought maybe different segments are actually now increasing their allocation. But what's your thought on that, in terms of percentage of your overall corpus that, in your view, people thinking to allocate to this?
So are you talking specifically about us or like in general?
Both, maybe.
Okay. So if I talk about our company, we are investing 80% of our savings into startup. And the reason is, there's a lot to learn. And I personally feel that, as a family office perspective, in the past, people thought of this as a side business, but now people should see this as a business, what they are doing in their own businesses also, because, there's a lot to learn. At the same time, there was a report which was by 256 Networks that, by 2025, $30 billion will be invested in Indian tech space. So I feel that thing is changing, and we are also moving towards the global trend, which is there. And I feel in 3 or 4 years, you will see that 1% might change to 20 or 30%.
Got it. No, that's very interesting. So I can see that I've already run out of time. Unfortunately, of course, there was a lot more to discuss, and especially with this LP panel being one of the very important panels from our overall sector perspective. But I really want to thank everyone here in this panel. Really appreciate your time. Would love to obviously maybe forward any questions that come up later to you separately. So again, thanks a lot for each one of you.
Thanks.
Thank you.